Hello and welcome to ET Now. You're watching IPO Central, and my guest today is from Anand Rathi. Is one of the oldest brokerages in India and a full service brokerage. Its IPO is opening on September 23rd and closes on 25th. It's priced between 393 to 414 rupees per share. It's a fresh issue of 745 crores. And joining me is Pradeep Gupta, who is the chairman and managing director of the company, and Roop Bhootra, who is the director of the company. Gentlemen, thank you very much for joining us on ET Now. To begin with, Pradeep, a brokerage coming in after some time, I thought you would be the first one to hit the Dalal Street, because you are one of the oldest brokerages in the country.
Yeah, actually, if you really look at it, this company is almost more than 30 years old. We started our capital market journey in way back 1994. But the idea was to create a little larger group, and from a group activity perspective, over a period of time, we kept on adding various different activities such as insurance broking, reinsurance broking, NBFC, wealth management, investment banking, and broking and distribution. You are right, broking and distribution is completely, it's very old, one of the oldest, and we are catering to various different segment of customers, from retail to M&I, HNI, to corporate, to institutional broking and NRI. So this is the whole spectrum of segment of customer base to whom we are catering in broking and distribution. This company is purely focused on broking and distribution.
Roop, can you tell us, you're going to raise around 745 crores in fresh issue. Where is it going to be used for?
Yeah, so mainly this particular IPO which we are bringing, that is for the growth of the company. Out of 745 CR, 550 crore will be the working capital requirement, and out of that particular working capital, majorly it will go towards the MTF funding. Nowadays, as you know, this business has become a too much capital intensive business, so that's why we are looking for this particular IPO.
Pradeep, this broking business has evolved over the last 30 years, from being a full service brokerage, we now have multiple brokerages in the country, including discount broking, internet broking firms, everything. How are you managing the technology transition at Anand Rathi, and what is the kind of market share that you have in this space?
So if you really look at from a technology side, digital space side, we are equally expanding in digital space also. As a result, if you really see our total overall, about 37% broking revenue is happening on a digital platform. But having said that, we do have a little different model than the rest of the country's model. If you really see, there are two kind of a model which persist in this broking industry. One model which is purely looking at volumes and volume driven businesses, and that's where largely people are looking at trading cycles, people are looking at derivative markets, and people are providing assistance, guidance and support and focus towards trading activities. The other broking houses who are purely looking at investment side are different and many. We fall into a second category which I am talking. We are largely looking at a total overall asset management side of a specific customer. Having said that, how investable surpluses of any specific individual customer, how we can address the need of that particular customer from an investment point of view, and trying to bring all the investment product which is good in that category before the customer, and customer get used to it and can start investing in various different investments, is the basic criteria, basic change and basic USP of this particular company.
How big is your operations from that point of view? Because you spoke specifically that the discount brokers or the online brokers which are now there are mainly volume driven, and they don't need to have a physical presence in that sense. But your model is a little different because you are spread across the country. So, can you give us a sense of the kind of the broking business which you have, how spread it is, and what is the kind of expansion strategy that you have there?
I mean, I think if you really look at the spread of this particular company, we have got about our own branch network, which is 90, and through our business partner, which is franchisee businesses, is about 1150 around. And our presence in almost 300 cities across the country. And having said that, our 90 branches are located in about 54 cities, which are largely state capital and largest city of the country. So that's how our strength is. If you really look at our spread in tier 2, tier 3 through our business partner and through part of our branch network is also very strong. And we are trying to penetrate to address the investment need of every single investor across the country and trying to reach there. Having said that, we are expanding in our broking businesses through our branch network. Branch network expansion is happening in two ways. Wherever we believe that branch network is viable, we go and open and look at branch opening. But by and large, increasing and expanding our RM base. In terms of business partner network, we constantly look at how we can penetrate and reach to district places of the country, and that's how we are looking and seeing how we can expand in the rest of the country and try to create our footprint across the country. And digital space is also helping us in terms of whichever customer who wants to have a ease of execution side, who wants to have a basic understanding and detail of any of a product, he can come and look at it. Because our belief in overall, while delivering to a customer, is when it is coming to investments, that customer always wants to have a second opinion, second confirmation on the decision which he is trying to take. And that's where our RM fraternity, that's where our business partner who are constantly in touch with investors and trying to guide them about the product, trying to explain the product details, is going to help us in handy to firm up their decision. And once they take decision, they can utilize our digital platform to execute that. So that's how our overall presence and whole model is being created. And if you really look at it, our focus, as I said, is to purely be towards investments. So we are more focused on a cash market businesses rather than derivative market businesses, because derivative is largely to send a customer towards trading and leveraging side. So on a cash market segment, if you really look at our broking book, it's 50% coming or more, about 50 to 55% coming from cash market side, and from a derivative businesses which includes commodity, currency and F&O side, which figures out about 45 to 50% in over total all revenue mix of a broking side, right? So that's how it is. And also we are providing the other investment product to the investor, which is mutual fund, PMS, AIF, corporate bonds, so various different assets class, different product before the customer, so that he can look at it. And if you really see overall revenue mix from broking to non-broking, we call it non-broking, and broking to non-broking, this revenue mix as on today stays between 60% coming from broking to 40% coming from non-broking.
Okay. Can you also give us a sense of the kind of equity derivative exposure to your revenue? Because in the last 2 to 3 quarters, there has been a lot of regulatory risk which has come into derivatives market. You've seen the regulator tightening norms. We are talking about from a daily expiry of a index to a weekly single index expiry in a week, and now we are looking at longer duration expiries as well. So, what is the kind of revenue that you get from equity derivatives as proportion of your total broking revenue or overall revenue? Roop, you can answer if you want.
Yeah, thanks Mr. Sanjeev, and you have raised a very valid question in the current market scenario. In this particular market scenario, when regulator is discussing the derivative, because ultimately clients are losing money there, So in that particular segment, as sir has rightly mentioned, our focus is comparatively too less on the derivative side. We encourage generally the hedging business more on the derivative business side. Out of the total our broking revenue, 40% is coming from the equity F&O side, and as it's mentioned that broking revenue constitute around 60% of the total revenue. So by that way, it's contributing almost 24 to 25% in terms of the derivative revenue. The second thing, in terms of weekly expiry or the expiry day volumes, we are not encouraging those volumes beyond a point. So comparatively, the impact of those changes which are there, that is comparatively far less in terms of our business. And we have diversified our business in such a way that any such these sort of things that should impact us comparatively lesser in coming times also. That is the overall idea of this particular business.
Still, what is the kind of proportion of your expiry day volumes or turnover or revenue that you get from expiry day? Because retail is something, retail and HNIs is something which you cater to. So it's imperative that we understand the risk which is coming in, or which could come in the future if a regulator takes a harsh stance on weekly derivative contracts.
I have mentioned first that derivative business itself is contributing around 25%, and out of that, this particular weekly related thing is between 20 to 25% on total basis out of this particular business.
Can you also give us a sense of your margin trading book as well? How big it is? Do you do it only for the cash market, or do you also do for IPOs as well?
Yeah, so important part, regulator is regulating this particular MTF business in a very effective manner. This MTF is purely for the cash market delivery based business only, and that's why we are focusing on MTF, because ultimately it is towards the investment of the clients. If client want to do the investment through their own money plus some sort of limited leverage, they can come into the MTF book. Currently at regulator level, total book size has already reached to 1 lakh crore. In our case, by March 25, we have reached to 685 crore kind of book. And the positive part, our book is well diversified, both in terms of number of clients and in terms of number of stocks also. We have a proper risk management system. If you will see overall color of my book, then less than 1 crore related book is covering almost 75% of our total 685 crore book that is there. And we are also controlling in terms of providing the majority, I can say, the exposure towards the Nifty 500 stock in that particular book.
Yeah, I was just adding another point to the Roop's what he has said. The overall philosophy is we are trying to look at a customer to increase his ROI, return on investment, again towards investment side. So those customers who wants to probably invest and try to generate extra money out of that investment on a short term or a long term, this derivative book is available, and as a result what we have done internal management risk wise or even from a philosophical angle, we have kept every single margin, every single customer level book is being capped, and if it is going to exceed, there is a strict control and management which is being done. For that, person has to come and take approval of Mr. Roop Bhootra for that.
Pradeep, you are here on ET now, and I can't leave you before you can tell us something about where the market is looking at. What is the kind of things which is influencing the market in today's time? We had the Fed cutting rate. We have India-US trade talks which have begun again. Where do you see markets moving from here?
See, basically, I am a person which is with a most of the time positive mindset, and because of a simple reason, what I am seeing in our country, capital markets are going to go and poised to grow. There is minimum 18 to 20% kind of a growth year on year basis is going to happen over here, because of it there is a huge big scope over there, and economy is constantly growing and is going to grow in comparison to any other rest of the world. So from that perspective, again, when you start seeing certain amount of silver lining in global sentiments, or probably certain amount of news which are going to impact positively on a capital market, obviously these markets are going to take again positive side of this particular segment. And I personally believe going forward, future looks definitely good. One has to look from a long-term perspective. Fundamentals are still there in this country and are going to play a major role over a period of time.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on ET Now. Your IPO is opening on 23rd and closes on 25th. 393 to 414 is the price band. Thank you very much for joining us on IPO Central today.
Thank you.
Thanks.